Alistair, welcome back. You've certainly been a huge part of this series, and he's definitely been somebody that I call one of my tribe, just a resource that I've gone to many, many times for insurance questions of every nature, and he's always been hugely helpful, which is great. So, today, we're going to pick your brain about the driving habits and how auto insurance is particularly affected as we age. So, since I'm a numbers gal, can you start with just some specifics on statistics with driving as we get older?
My my son just turned 16 last week, and he may have been driving my pickup up north bird
Good luck
hunting
with
for the
that.
last 5 years, so I wasn't so worried about setting him free. I think he gave every kid in Rockford a ride home last week. But and then I remember my dad having I had a knee surgery, and I had to get a ride home from my dad. And I think even under some anesthesia, I still wanted to help him drive. So, you just never know, right? And so for me, when I look statistically, they say 1 in 5, like 16 to 24-year-olds, will get in an accident. 1 in 14 from 24 to 65, then 1 in 10 from 65 to 75, and then it drops. It's kind of a bell curve. It drops back down to 1 in 7 over that age of 75. So, but technology and other things I think have changed things, but it's still a pretty. We're a numbers kind of business, and so the actuarians, we call them the fun police. They tend to know what they're talking about just from real data. So.
Yeah, definitely. So, assuming that a person hasn't actually had an accident, can age itself ever affect a person's rate directly, like it does when we're paying for a 16-year-old driver?
I had a buddy, he's a consumers energy public relations guy, came into my office on 2 wheels a couple years ago. He says, Lynch, I got to get Farm Bureau. I'm like, why? He said, well, my dad says when I get gray hair and turn 40 that your rates can't be beat. And I was like, well, you're probably not far off, but there's each company and carrier has different tendencies and appetites for who they want to insure. Um, Generally speaking, if you got a little gray hair, our rates are cheaper up to about age 85, and then the industry tends to slowly increase rates after the age of 85.
Mhm.
Um, Outside of that, there's other factors, right? So for us, the things we look at to control, nobody calls me when their price goes down, by the way. People only call me on
I was
price.
going to say, does that ever
Yeah.
happen?
I've never met somebody because they said, I think I'm underinsured. Can I give you more money, right? So, so we spend a lot of time in the premium conversation. Uh, Technology is pretty cool these days. I have an office on the lake shore and an office in Grand Rapids, and zip code 49442 runs from like Muskegon wastewater treatment all the way down M46 into the city of Muskegon. There's a lot of different things that can happen within that zip code. It's really unique. There's car deer accidents on the east end of it. There's crime on the west end. There's just high volume. So technology today, industry carriers are able to micromanage inside zip codes by smaller geocodes. So your zip code is probably one of the biggest factors for your rate. Um, More than anything. If I have somebody that moves from Ada to Lowell, I'm like, crap, I'm going to lose them. They're going, because it makes a big difference for cardiac accidents. So, um, biggest thing is age. There's an insurance scoring model, which is, I don't think it's that accurate personally. I own a business, so I run, 20 grand worth of credit cards a month, and so I look to the credit bureau like a
Mhm.
unsafe bet. And so my insurance score is really low. I may have gotten divorced a couple years ago. My daughter turned 16, bought her a car, didn't like my premiums because it doubled. I was like, I wonder if I put her on as a named insured, what would happen to her insurance score? She's never owned a credit card. She barely has a bank account, and her insurance score was almost a third higher than mine. So my attorney wouldn't let me do that, but I was tempted to add her on as a named insured
Mhm.
just to save some money. So scoring model is credit. We access a thing called LexisNexis every year. It's basically a credit score and other kind of habits. like we give a 10% discount if you get a quote from us and then wait 10 days before you buy coverage, because people that come flying in on two wheels with all their mail on their dashboard, there's some habits we see. So, but longevity with a company, the longer you stay with, I represent 3 auto carriers. With Farm Bureau Insurance, the longer you stay with us, there's a discount for not moving around. And then age, like I said, is a factor. So my son is not the cheapest one to insure this last week. So
Well, we have 3 children between the ages of 18 and 25, so my insurance is through the roof right now. And as a mom, I keep resisting the urge to bill our oldest son, who now has more money than we do. And somewhere else. He has his own condo. Send him the darn bill. No, I'm mom. I feel bad. So anyway, let's talk about everybody's favorite subject, liability. So I just read that United States is the most litigious country in the whole world. I can certainly imagine that. I don't know how true that is, but let's talk about the liabilities that older drivers can face, and especially like the example that Omar had given of somebody who's been warned and yet continues to drive, when their driving ability has already been questioned.
yeah, I think, from the big picture standpoint, when I look at, I just recently insured a couple of trial injury attorneys, and it's pretty interesting the stuff they post. Just got another 200 grand out of this insurance company or whatever, and they do it every day. They know what to look for. So for me, risk is risk. I don't care what age you are, and I'll get into some of that. But when it comes to some of the things like the OC form that Omar was talking about, unfortunately, I see it monthly in my agency. Somebody comes in, hey, when did you guys move? We haven't. And then here's my tow bill. Something happened to my car, it wouldn't start. It's a 2023. You're like, And then they go downstairs, come back up. Hey, I locked my keys in the car. Can you give me a ride home? And then you get home and the daughter's like, oh, thank God, he's been missing for 2 hours. And you're like, just like you talk about, probably shouldn't be driving. And then just came in last week driving. And I'm like, so, for me, it makes me want to seek that type of thing. Without those types of forms in court, I don't think there's any more risk unless you've got some sort of eyewitness that can give some sort of character reference on mental health. But it's pretty wild. I got a guy went to his car, 3 different cars he tried. Then I called the son and, well, he had a surgery. His memory's not so good. I'm like, I know, but I think people are selfish when their parents get older. They don't want to become the taxi. So they just turn the blind eye. And ultimately, unless a lot of people know about that in the if you look at medical records where a doctor, recommends you shouldn't be driving, something like that, liability-wise, I don't think there's any more risk. But
Gotcha. That's kind of interesting because it seems like there could be in the court of law if it came down to it and there was an accident. But
right. But I would say of all the things I look at on an auto insurance declaration daily, liability is probably the most incorrect coverage that most people have. And sometimes it's the cheapest thing to adjust. Some carriers don't want to pay big lawsuits, so they give you a pretty funny TV commercial. They get you in the door with a cheap price, and then when you actually need to use it, it doesn't work. And so my dad, he was like an international VP of operations of some big chemical company, and who's your first client? Your second client? Hey, Dad, right? So I was like, what happened to your rates? He's like, oh, they went way down. I went in and they saved me money. And I'm looking at his declarations, and he's got the state minimum that you could cover yourself for a lawsuit was $20,000. And so now it's 50, which that doesn't get you very far. So I always tell people there's a 10-page asset interrogatory that all my trial injury buddies are pretty good at filling out. If you got a rich uncle, you got a nice house, you got a good pension, qualified assets, cash in the bank, boats, cottages, right? All that stuff's on the table if you have a bad day. And a lot of people say, well, it won't happen, but it can. I know an attorney that used to represent, she worked for Seacrest and Wardle in Grand Rapids, and she used to represent insurance carriers if they were suing or getting sued. And she punched me in the arm one night at a restaurant. She's like, Lynch, you're with Farm Bureau. I love those guys. And I didn't know why. And she's like, well, I said, what's the deal? And she's like, well, you guys have the right liability coverage out the gate. Like, not knocking a carrier, but Allstate is famous for insuring a $900,000 house, and they give you $100,000 of liability. Well, if they can take your house, you should at least probably have generally the value of your house in coverage. And so for us, we just do the math quick. Are they gonna take your house? Probably not. Are they gonna take your qualified retirement? Probably not. But as my friend Sarah at Seacrest and Wardle says, they can do anything they want. So to me, turn down your furnace, buy an Afghan, and get your insurance limits where they should be, right?
Yeah.
Or raise your deductibles, right? Or don't pay for your kids' insurance anymore.
No.
Sorry.
I know our youngest was in the house this morning. He's like, Mom, can I take XYZ? I'm like, of course, take anything you want. My husband's like, what? No, tell him to buy his own. So,
There's
old
a thing,
habits die young.
Yeah, right. There's a thing called a liability umbrella policy. It gives you an extra $1 million of coverage if you're ever sued. I call it lawsuit money. They're like 180, 200 bucks a year for most carriers. So I always tell people the value of a human life in a fatality is 1.2 million. So if you don't have 1.2 million, make sure your liability limits match kind of what you're worth on paper. So.
Alistair, how often do you recommend that people talk with their insurance carrier or somebody like you? Is it an annual basis? I mean, I know one of the things in real estate with the house values going up so much, I guarantee that there's a lot of people out there that are likely underinsured in their homeowners, and I'm sure that there are equal things within auto insurance that, just like you said, how do you really check that?
With the no-fault reform in auto, there's some huge gaps in coverage that rewind before no-fault reform. If you hit a driver, like a teenage driver, or if you sold everything you own and went and lived with your kids and you were never listed on an auto insurance policy, your mail didn't come to the house, it went to a P.O. box, and nobody knew that you lived at that address and you were in an accident in your daughter's car, they would backdate to the date you moved into the house, add you on as a driver, and then give you unlimited medical for the rest of your life. Now, if you do something like that, zero. They'll deny any coverage if you're hiding drivers or if you're not listed properly on auto insurance. Kids that go away to college, they decide they want to register to vote in Ingham County because the Register of Deeds was cool. Like, they change that address and they're not listed as a named insured. If there's no insurance policy that's mailed to the address they live at, there's no medical coverage now for things like that. And there's a ton of lawsuits that we're watching and waiting to see what happens. So I just tell people, when in doubt, I'd be picking up the phone when you get the renewal packet and just making sure. Used to be certain companies covered car accidents. Ones that don't, that you might know now, Meyer Corporate, Steelcase, Herman Miller, Gordon Foods, their health insurance gives you zero coverage for a car accident. And people switch jobs and they don't tell you. And sometimes you have to change your coverage to make sure that you get a medical bill paid, which turns out those aren't cheap.
Right, and that was part of the question too, because of course, requirements of insurance vary drastically from state to state. And can you explain how that works? The difference between how an insurance company may or may not pay for physical injuries sustained in an auto accident versus, how they might pay for something their regular insurance would pay for a physical injury that was sustained somewhere else, how that changes.
Most of the time when people retire, their health insurance comes from some sort of government entity through the VA, Medicare, Medicaid, and none of those policies cover car accidents specifically. So if you have if you live in Michigan and you are retired, my advice is always to have on your auto policy, have primary medical, unlimited coverage. Um, for there's a my top 5 list I'll get to, but if you go to Arizona for the winter, if you go to Florida, you go to Canada for the winter, your Michigan no-fault medical will cover you wherever you go. And so if for some reason you're one of, I have probably 1,700 clients, 2 of them opted out from unlimited coverage. I made them sign a form that said I didn't agree with it because there's so many gaps in coverage. Like there's a Medicare opt-out, there's a Medicaid $50,000 limit. While you're in the hospital, they're great. The minute you go home, you need a wheelchair ramp, you need good attendee care, you need any of that kind of stuff after you go home, good luck. So huge gap there. And then other people are just lowering their limits. So back to my liability comment, you can sue people in Michigan now for medical bills. So some guy next door to you can't afford his car insurance, drops it down to the $250,000 limit. Tom worked at the hospital, he knows. I spent 10 days at Spectrum because I broke my back mountain bike, and it was like $5,000 for the ambulance, $50,000 for the surgery, and like 150 grand just to eat Jello and drink Sprite for 10 days. You know, you're like, that's a lot of dough. And so for me, I'm like, why risk 180 grand a year to save money there where it could really ruin you? So, you know, you go with the unlimited coverage, you're good anywhere in the country. But just be aware that the people driving next to you might not have that same coverage. And so that's another reason to get the liability up. And for me, all those things when you go home, I have some friends that own a in-home healthcare business and they work a lot with Mary Free Bed. And so I know what they charge them on, so.
Yeah, medical bills are absolutely crazy. So when someone has actually had an accident, especially an older driver, can you, as an insurance company, require them to do a safe driving course?
We don't. We simply work off, technology dumps into our computers a motor vehicle report. So if we see points, at fault claims, things like that, then you end up on the naughty list. Past that, you know, we can't control what could happen. We just have to work off what did happen.
Gotcha. So the naughty list basically raises your rates, but not necessarily requires something of you.
Correct.
Gotcha. Okay, great. We hear a lot these days about the different safety features that are available in vehicles. So do you feel like some of those new safety features, such as blind spot detection, lane departure systems, that see those as being effective, especially for older adults? And have you seen some of those to be really, really good?
There's an app that we offer that everybody's against because they think Big Brother's watching, and I'm like, they already are. I think one of the companies sold the data from like OnStar to insurance industry. I got on the naughty list for that. But if somebody ever offers you a safe driving plug-in app, anything like that, it's not to raise your rates or lower your rates. It's so when you do end up in court and they sue you for $1 million and they say you were driving 150, they go, no, he was only going 73. So I wouldn't be afraid of some of those tools. They're good savings. So that's the technology I do appreciate. My son's got a 2011 car, and he was mad he didn't have a backup camera. And I was like, well, you could just, you know, turn your head. But, you know, I rented a car a couple weeks ago, and I wanted to turn everything off because I went to change lanes. I'm like, the power steering's messed up. And it wasn't. It was just trying to stop me from changing lanes. And there's some pretty cool stuff out there. I may have drove a Suburban through Howell on 96 with my hands off the wheel to test my lane detection system on my Suburban, and it worked pretty good. But there's actually a detriment to that. Go to Van Eck Auto Body or Car Center Collision and ask those guys how much it costs to fix a car today. It's outrageous to recalibrate all these sensors and stuff. So net end result, you'll probably pay more for insurance long term for a minute, but the technologies, like I insure some Teslas, and the rate's not bad. I was surprised. Like I always figure $600 every 6 months should be a good price for a full coverage vehicle, and the Teslas are usually $450. So there must be some thought behind that stuff being effective. But sometimes there's just too many buttons. You know, I think it's distracting. So
I had one of those plug-in things in my car, and the darn thing kept beeping at me, so I threw it away.
Oh yeah, I get guys that call me all the time. They're like, Alistair, I did not do a jackrabbit start yesterday at the corner hall in Sheridan. I'm like, take the app off, give me $300 and move on, right? So
Yeah, Alistair's getting ready to redo our personal insurance, and I basically said, I will pay the extra money. I do not want that thing in my car, but that's just me. All right, so we're gonna go ahead. Alistair, before we move on, do you have any personal other stories that you wanted to share that kind of specifically relate to, older drivers?
um, just I think underestimating the power of the legal system these days. I think I see it all the time. Like I said, I got these. I think they're my buddies still. I'm not sure. They send me a letter once in a while, like we're suing your client for 2.8 million. And you remember taking the call the year before. It was in a Walmart parking lot. It was bumper to bumper, no known injuries. And all of a sudden, you're getting this big letter that says this, right? We're suing you for everything you own, and more so. So we have an email that comes out every Friday. It's a list of large losses. It's our top 10 settled claims just at Farm Bureau. We're only in Michigan, and our 52-week running average is over 2.2 million. And it's car accidents, it's fires and things like that. But there's always one or two in there where you just don't think that you could get sued for that much money, and it's real. So it's a big deal, especially I hear you baby boomers have a lot of money, and so the attorneys, I think they probably know that too. So they're going after things they shouldn't be. So I guess it's just a broad spectrum thing. Like I had a case, and I'm just gonna add in things to watch out for. So my estate planning attorney always gives me these tips, like if you're jointly deeded on your house, you shouldn't jointly title your vehicles because then it's harder to come at some of your assets. So get your kids off your policies. Even if you got to buy them their own policy, get them off. You're opening yourself up for stuff. I have a case where a guy I know in Cedar Springs owns a manufacturing company. His daughter went to Grand Valley, got the tickets, kicked her off. She went and bought her own insurance. I do a lot with mortgage work, and so most people under the age of 30 don't talk to people, so they buy things on the computer, and they don't know what they're buying. So she bought the worst coverage possible, hit a girl that was going to med school, pulling out of Grand Valley, and that girl was going to go to school to be a surgeon. She can't perform that now, and so she got sued for future wage loss. They won the last lawsuit. Since dad was titled on the vehicle, dad has a $3,500 a month wage garnishment for the next 20 years, just like child support. So it's real stuff. And it's like I said, some companies don't want to pay big lawsuits, so you got to find the ones. I could give you the names of the ones that are good. Usually there's some gray-haired dude and shingles above them. If you want to buy insurance from someone, make sure it's a real person, and they tend to do things the right way, I found. So that's my story.
No, good. I agree with that. And I'm a big proponent of working with people that you can see. When Alistair comes to review our insurance, it will likely be at our kitchen table. So I think that speaks volumes right there. So,